You guys ever cooked a turkey before for Thanksgiving and you look at the outside and it looks all nice and crispy and starting to brown up and you're like, oh, this turkey's done. Then you go ahead and you take the temperature and you realize, oh, no, I got tricked. It's not even actually close to being done, right? That's the stock market at this point in time. We have a very tricky stock market here where you look at the indexes as green, green, green. Looks great out there, right? But then you see there's just devastation, and the devastation is not stopping in relation to so many of these stocks. Celsius Holdings down another 10% plus here today. The stock's now down 45% in less than 2 months. Absolutely incredible, right? Celsius, by the way, if you're not familiar with that, what I think most people watching this are familiar, that's an energy drink company, gotten really big over the last 5 years or so. Lululemon continues to get hit, another 2% plus here today, down over 44% year to date. Lululemon, you can know it because, every other female at the gym probably wears some Lululemon, right? Estee Lauder almost broke 100 today. You guys know I've been saying that baby's going to break 100, right? Ooh, was flirting with it here today, right? If tomorrow's a red day, don't be surprised if Estee Lauder does break $100 and goes into the 90s. Absolutely incredible. Stock just goes down and down and down and down and down. If you've ever been to a Macy's, a Nordstrom, anything like that, go to the cosmetics area and you're going to find so many Estee Lauder brands. They own so many brands. It is ridiculous in regards to that company, right? Nike, another new low here, down 33% year to date for that particular stock. It just goes down and down. I don't think I need to explain what Nike is, right? Starbucks, same exact situation, one of the most famous companies out there. Starbucks, new lows since Rona here today, right? Down 13% in the past 5 years. Absolutely incredible. Starbucks can't stop getting hit. Winning Resorts just hit a new low for the year now at this point in time. Boeing refuses to fly. That stock only crashes, no pun intended. And that stock's now down 30% this year. Chipotle, the crash has started in regards to Chipotle. That one's now down almost 15% just in the past 1 month for Chipotle now at this point in time. People ask me, what am I going to do with my Chipotle puts there? My thing is if Chipotle breaks 50, goes down to the 40s, I'm probably peace out of those. I'll probably take my profit and run. Not that I think the downside's done in Chipotle if it does break 50. It's just, when you have options over time, you obviously have decay there. And so if this stock goes in the next month or two down to the 40s range, somewhere in the 40s, I think it just makes sense to kind of get out of that one, being that you're going to eventually have decay, right? Tesla Maesla, every time the bears want to put this one in the coffin, it comes back here today up about 4% in regards to gold Tesla Maesla. The Russell's rolled and the Russell Wilson's up 7.6%. Just in the past 5 days, it might be for real, folks. SoFi's coming back to life. That stock's up 16 percentage points in the past 5 days. Palantir just hit a new multi-year high here today. That stock's now up 69% year to date. Absolutely incredible, okay? We got some things to discuss in this video. Why are certain stocks doing so trash while others are doing so great, right? We're going to speak about that and where things are going to head from here, essentially. And then we're going to talk about how to tell the difference between, getting a great opportunity in some of these stocks that are going down, right, versus some of these other stocks that honestly deserve to go down. So we'll get into all that in this video here today. Appreciate y'all joining me. As always, thanks so much for being here, folks. We're likely going to hit 733,333 subscribers this week. I appreciate every single one of you subscribed to the channel. Pretty darn cool. Pin comment down there today. I'll put access for my private group if you're looking to apply to join that. Get access to all my courses on building your wealth, and exactly how to identify great opportunities in the market, all those sorts of things, 6- and 7-figure Discord chat, see the moves I'm making, my $2 million plus Fidelity account, all that good stuff, okay? Alrighty, so very important we start out right here and talk about this, because this is one of the biggest, most meaningful things happening in the stock market right now, okay? It's small over big time. It is small over big time. What do I mean? Basically, the small cap stocks, this is for the first time in a long time, and I mean a long time. We've been waiting on these stocks to roll for 2+ years now, okay? It's the first time for the smalls to actually get rolling, okay? And so these small cap stocks are outperforming the larger cap stocks in quite a significant manner now at this point in time, right? You can see something like this in something like a SoFi, right? SoFi up 16% or so just in the past 5 trading days. Why? Well, listen, if smalls are going rolling, somebody like a SoFi is going rolling, right? SoFi's a small. They look at it as a small financial institution, a small bank. No one's looking at SoFi as a big giant. They're not JP Morgan. They're not Goldman Sachs. They're not Bank of America. They're not Wells Fargo, okay? And so if folks want to go more risk on, they're going to pile into a stock like SoFi. You could see a stock like SoFi go from 6 to 16 like that. 6 to 16 like that when you're in a real risk on market. You got to understand, if you stay risk on for 6 months, I'm not even talking about staying risk on for 6 years or 3 years or 2 years, even a year. I'm talking you stay risk on, a true risk on market for 6 months. SoFi is going to blast so high, it's going to flip your flapjacks, okay? Absolutely incredible. You look at something like this. This shows you kind of over the past few trading days here, past 5 trading days, right? Google stocks down, Microsoft stocks down, Nvidia stocks down, Meta stocks down quite a bit over this point in time, right? And you look at something like this, it's very clear we're risk on. People are rotating out of a lot of these bigs. They've looked at a lot of these massive companies, the Googles, Microsofts, Nvidias, Metas, these sorts of companies. They've looked at these as kind of like safety in regards to uncertainty about where rates are going. Basically, there's a big fundamental shift that happened last week, which is people are now confident rates are going lower from here and that the Fed's going to start to lower Fed funds rate from here, okay? And so for the first time in a long time, there's actual confidence, actual real confidence in regards to where rates are going. And so people are looking at these and they're saying, you know what, these have had a great run, I'm going to rotate. And keep in mind, and I explained this to you guys months ago, right? This is very important you understand this. When money comes out of these stocks and they go to the smalls make a way bigger move to the upside than these stocks make to the downside. And the reason being is, in order to get these stocks down in a substantial way, I mean, you've got to sell a ridiculous amount of shares or a ridiculous amount of money. Well, when that money goes and then rotates into these smalls, it's such a huge amount. I mean, I believe the entire market cap for the Russell 2000 is something like a couple $1 trillion, if I recall, right? Now, let that sink in for a moment. Because we have several stocks in the S&P 500, for instance, right, that are over $2 trillion, right? Several stocks. I think there's, 5 stocks over $2 trillion market cap? So we have individual companies in S&P 500 and in the Qs that are larger than the entire Russell 2000. So when you got to understand, when money comes out of these guys and it rotates to smalls, you see these smalls fly 10, 20, 30, 40% in a matter of days. Not weeks, not months, not years, in a matter of days, okay? And so the longer we stay in kind of this risk-on rotation, I'm just saying, like, you're going to see a lot of these stocks go 50% up, 100% up, 200% up in fast, really, really fast, right? Now, you look at something like a Celsius, right? Celsius, we talked about at the top of the video, down 45% plus in less than 2 months, another 11% down, right? A stock like that has 2 problems, and you got to understand what these 2 problems are. One is valuation, right? You know, I got several people that asked me about Celsius, you know, earlier this year. And I looked at Celsius and I'm like, man, the numbers are very impressive. Obviously, what they've done with the brand is very impressive, but the valuation is incredibly high, really, really high P ratios, right? And that's just one issue. The second issue is just as big, if not bigger. Growth rates are expected to drop rapidly now at this point in time for Celsius, which is freaking a lot of people out. A lot of people, right? Celsius Holdings drops to 5-month low as concerns over sales growth continues. This just came out here today, right? Celsius Holdings fell to its lowest level since late part of January, swing down on Monday, all the way down to 52 as we've seen, right? The energy drink company is now down 45% plus from its 52-week high. It was up to about $100. Short interest on Celsius is about 9%, which is relatively high, but it's not like crazy high. Contributing to the selling pressure on Monday, TD Cowen lowered its price target on Celsius to $68 due to sharply slowing sales growth trends. Other firms have also recently reset expectations on Celsius due to the recent Nielsen data readouts and incremental inventory optimization by PepsiCo. Now, so right off the bat, you know, like I told you guys, Wall Street has a lot of this data before anybody else has this data, this Nielsen data, and from these other folks kind of showing you, you know, how often these items are being scanned, they're being checked out and being bought. And so clearly Celsius numbers are not going to be very good for likely the next few quarters, okay? So this is just something to kind of keep in mind, and it's almost a guarantee that the numbers are not going to be that impressive over the next couple quarters, right? The Wall Street Journal also published a story today, on Monday, warning about the health impact of energy drinks. The story made a claim that many of the fat-burning and your metabolism related. Boosting messages from Celsius are misleading, right? And so that's not a good look. Now, do keep in mind, as somebody that used to own Monster's beverage years ago, and back when it was called Hanson's Natural Beverage, oh my gosh, like Monster always had to go through these things about, somebody drank too many Monsters and they died, or like it has too much sugar, right? And I think everybody by this point in time knows it. So like energy drinks are not healthy for you. The same way that, I don't know, drinking hard liquor is not healthy for you, right? But some people are going to choose to engage in that, and that's just what it is, right? And so just a little food for thought in regards to that. Now, here's the deal, okay? Celsius, even after this crash, is still forward P of 50 or so. No, keep in mind, that's after the stock has crashed 45% plus, right? Think about where this forward P was. Think about where it was prior to this crash. I mean, let that sink in for a moment here, right? Now, you might look at something like a Monster. You might say, well, wait a minute. Celsius getting destroyed. Why isn't Monster getting destroyed? If the Nielsen data is not the best for energy drinks right now, right, then why is Monster not getting hit nearly as bad? And if there's bad publicity around energy drinks, which, by the way, like I said, Monster's gone through bad publicity in regards to energy drinks for 20 years now, right? Like why is it not really hitting Monster? 12.8% year to date down. That's like nothing, right? Compared to Celsius and where that stock's getting hit recently, right? Valuation matters. This is why I talk about valuation. Every single time I break down a stock pretty much, I always talk about valuation. I always talk about PE ratios, forward PE ratios. This is why it matters, right? Celsius went in this situation with a sky-high PE. Listen, you go in with a sky-high PE, that means you have sky-high expectations. If suddenly you don't quite hit those expectations, no. You're in a bad place. Your stock's going to get absolutely wrecked. The only way you can keep, if you have a sky-high valuation, the only way you can keep it going is you've got to come in with just ridiculous numbers after ridiculous numbers after ridiculous numbers to keep the show going. Somebody like a Monster, they trade much more fairly valued. Forward P at 27, 2-year out forward P around 23, as far as expectations go there. Monster is just an easier one to wrap your head around. It's a much easier one to own, much more diversified business, right? That's something to keep in mind there. You look at somebody like a Lululemon, here's the deal with Lululemon. We got 3 issues here. 2 are for sure issues. The other is a potential issue, right? We got to speak about, right? We have athleisure weakness. That's clear. So you can see it in Nike's numbers. You can see it in Lululemon's guidance in the latest quarter. Like, there's clearly weakness in athleisure. Secondly, we have actual real consumer weakness going on out there. We've seen that in regards to all the sentiment surveys, right? The consumer confidence surveys. The real weakness going on out there, right? In regards to consumer. And third, we might have company-specific weakness, which is the scariest thing. You can get through athleisure weakness, you can get through consumer weakness, but what if, as a company, your brand's falling off, you're not quite doing as well, people aren't viewing your brand the same, things like that? That's a much bigger issue, and so we'll speak about that in just a moment, but this stock can't stop dropping. I mean, every time you think, oh man, maybe it's done going down, no, it just goes down more. It's sellers on sellers on sellers. I mean, Lululemon's going through what PayPal went through a few years ago, right? Remember when that stock went from like 300 down to 60? And it just seemed like the sellers never ran out. And now for Lululemon, it's starting to feel like that a little bit, 44% down this year. I mean, that's brutal, right? Now, we got some problems here, right? I don't know if you guys seen this headline out here a couple days ago out of Bloomberg, and it went other places as well. Lululemon accused of greenwashing environmental goals and impact. Lululemon tricks consumers into believing the brand is sustainable and environmentally friendly through its Be Planet marketing campaign, despite increasing its greenhouse gas emissions. I don't know. That's one of those things that there might be a certain amount of Lululemon customers that get turned off when they hear about this. I don't think it's everybody that buys Lululemon, but it might be a segment. Let's say it's 3% of their customers actually really care about this, or 5%. And like, Lululemon lied to us, like, bad, I'm not buying any more Lululemon. Maybe that happens, right? So that's kind of an issue. But then you're seeing more stuff like this. Like, I was just looking for Lululemon news, found this. Get Lululemon's iconic Align leggings for $39. 128 rompers for $39, $29 belt bags. And so that's one of those things you look at and you're like, why are they discounting? Do they have some sort of issue with their brand, right? Now, here's the deal, okay? Lululemon's actually trading at a cheaper forward P than Nike, which might make you say Lulu might be a better deal because Lulu's expected to have better growth in the future, but it's not that easy. Remember, we're playing the game of Wall Street as well, right? Here's the problem. Nike's been through tough times. a million times. Nike's been around since, Nike's been a famous brand since the 80s and 90s, right? So Nike's been through times where their revenues went negative and, bad economies, bad consumer environments. They've been through it all. And they'll get through this and they'll be just fine. Lululemon has not. They haven't been through as a big brand. Nike's been a big brand since the 80s and 90s, right? Lululemon just became a big brand. So they haven't gone through the really tough parts, right? Like Rona was actually a boost to their business. That wasn't a tough time for them. That was a best case scenario. People being able to be at home, wearing all these sorts of athleisure type outfits and whatnot. It was the best situation for Lululemon. Lululemon hasn't been through a tough time as a public company yet. This is our first time. So we don't know how they're going to fare in this situation. We don't know how they're going to handle it. Maybe they handle it great, or maybe they're going to diminish their brand a lot more, and next thing you know, it's an Under Armour situation, right? Now, the other thing with Lulu right here is very important. Look at next year revenue growth expected here. 24% analysts kind of have. Well, that's brutal. Can Lulu really grow revenues 24% next year? I don't know. I mean, here's the deal. No, analysts have brought their numbers down. Current year expected revenue growth down to 2%. So also they're expecting some sort of explosion to the upside in regards to Lululemon's revenue. Is a consumer going to get in that much better of a place in the next year to have that sort of revenue? I don't know about that, right? Nike's got a much more manageable numbers next year of 7.9%, right? Much more manageable for Nike. So that's where you run into something like this with Lulu here, where it's like, let's say the growth rates aren't quite hitting, then everybody has to revise next year's numbers, and it's another bad look for Lulu, and next thing you know, that stock's under 200, and it's $100-something, right? Very important to keep that in mind. Starbucks, the stock's the lowest it's been since Rona. It just goes lower and lower and lower. And I had a realization about Starbucks recently. And it's fully come to me now at this point in time exactly what Starbucks is and exactly how to view this company for the next 10, 20, 30 years, okay? And I've been kind of thinking about this for the last few weeks, but it finally really set in this weekend. Went to a Starbucks, actually this exact Starbucks, right? First off, the drive-thru was insane. It was literally to it was so long it was ridiculous. It was I think it went from here all the way through. And so my wife and I was like, let's go park. So we parked right about actually where that car is there, right? And we went inside. The inside's booming. I mean, they got probably 6 workers on staff, and all of them were hustling because I'm telling you, the drive-thru was just ridiculous. The amount of takeout orders were ridiculous. And then you also have people that are walk-ins like we did, right? It was ridiculous. It was out of control, right? And so all these people coming, going, right? And it just really set in what Starbucks actually is. And the way I would put it to you is Starbucks is basically the government, but without the insane spending. So the government, they tax you everywhere. If you've ever been a citizen in the world, you know what it's like to deal with taxes, right? Every time you do something, you make money. You get taxed on it, right? And you could be taxed several ways. You could be taxed by federal government. If you have state taxes, you'd be taxed there. You're taxed on, Medicare and all these different other government-related programs, right? You go to buy something at the store, boom, there you go. Here's another 8% sales tax on top of that, right? You die, you get taxed on inheritance. I mean, there's tax on everything, right? And so the government's just this big money collector all the time. And that's almost the way I actually view Starbucks. It's just they don't have the insane spending problem that the government has. But basically, they're just getting all this revenue. And the way I would put it to you like this, let's say I get on a plane today and I fly to Shanghai, China. I would say there's a high probability while I'm on my trip to Shanghai, China, I'm going to go to Starbucks. And Starbucks is going to get that tax revenue from me, right? I was in New York City. This was a couple weeks ago. A few weeks ago, I was in New York City for 8 days. I ended up going to Starbucks several times. It wasn't the only coffee shop I went to, but I went to Starbucks at least probably 3 or 4 times throughout that trip, right? Starbucks collects in their tax revenue on me, right? Before basically every flight when I go to an airport, Starbucks collects that tax revenue on me. I end up at a Starbucks right before my flight, right? And so this is the way I kind of view Starbucks. It basically like this just tax collector, just all over the world, literally, right? And they're just there to get their money, and they're going to put up their numbers and going to do their thing, right? Now, Starbucks is going to be fine. Starbucks is going to be fine in this situation. People will look back at this time period we're going through here in the second half of 2024, and they'll look back and, a few years from now and be like, geez, remember when Starbucks was $70? That's insane. Could we get this stock for this price now? But, yeah, they're going to be fine. The valuation's looking really good. The stock's a buy. This might be the next stock I feature on the series I've been producing this year. I've been doing this kind of series this year called basically, buy this stock and don't stop buying. And I've done a few videos like this so far. I did Nike a couple weeks ago. I did Tesla about a month or two ago. I did Palantir about a month ago. Buy Palantir and don't stop. And I did Shopify. So especially if Starbucks breaks 70 and goes down to like the $69 level, I'm going to do one on Starbucks. It's going to be called Buy Starbucks Stock and Don't Stop. And it'll be like a 30-minute in-depth video just covering Starbucks. So yeah, don't be surprised if you see that video from me in the next few weeks, okay? Winning Resorts, oh my gosh, new low for the year for this stock. It just seems like it can't get out of its own way. Now, you guys know, I've talked about it on the channel, they're trying to build a property in New York City. They want to get the approvals. It's supposed to be like a $12 billion resort. And I was bullish on this because it's New York City. Like, oh my gosh, like that's a huge opportunity in terms of the room rates they could get, in terms of the gaming revenue they could get. It's insane, right? But I did actually watch a video from a gentleman recently. It was actually on Instagram. And he's actually not a stock market person, but he is somebody that just kind of like, how would I put it? He just knows the real world, I guess you can say. And he's basically saying, Wynn, stop it. Don't build in New York City. And he made a great point. He made a point that New York City is going to take every dime they can from Wynn. And they're just going to use Wynn as an extractor to just keep tacking on new tax revenue on Wynn, right? They're going to, because everything's unionized there, they're going to nickel and dime them, keep making the wages go up. And basically, Wynn's never actually going to make any real money from this property. And the more I thought about it, the more I'm like, he's actually probably right. New York City's probably going to totally take advantage of Wynn. Wynn's going to go massively in debt to build that property. And then New York City's probably not going to let them make a whole lot of money in regards to that. Because New York City's not really incentivized to have Wynn continue to do great and then make a bunch of profits and pile that money into the next property. Because it's not like Wynn's going to build another property in New York City. You get what I'm saying? So the more I thought about it, the more I'm like, you know what? I think he's right in regards to that. And it takes you back to Atlantic City. If you don't know, I mean, this is Atlantic City nowadays. Atlantic City basically looks the same nowadays as it did back in the 80s and 90s. Like literally you could fly around in a helicopter and it basically looks the same. It's in a time warp, right? And it's like, what happened to Atlantic City, right? The gaming hub of the East Coast, it was a very exciting place back in the 1980s. Like, what happened there, right? Well, Steve Wynn talked about this. Steve Wynn knew back in the 1980s that Atlantic City was doomed for obsolescence. Steve Wynn spoke about Atlantic City's government was corrupt and stupid. Those are Steve Wynn's words, right? And, who's to say we're not going to have a similar situation in regards to New York City there? So maybe he's ended up being right. And in order to, my city, Vegas, we really cut it down. Because Vegas is so incentivized to continue to have, because we're so reliant on tourism, so the city really all works together to make sure this pipeline keeps going forever and ever and ever, right? So more and more people visit Vegas and come and have a good time and those sorts of things. So everybody's like on the same mission, on the same game. And so that's why Vegas just continues to look different and different over time, and why people continue to invest in projects. Like just in the past few years, like these are projects that opened Circa, unbelievable property downtown. Like absolutely, that's the first property that had been opened downtown in a long time. The Resorts World opened just, in the past few years. Fountain Blue opened in the past few years. They probably should have kept it closed down, in my opinion. The Sphere just opened up here in the last few years, right? We got a place like this at, I think it's Blake Shelton, put $30 million into this. This Old Red Place, which is it looks like actually a really interesting place right on the Strip there. It's kind of right across from Bellagio, and it's kind of like a country music place and whatnot. It looks actually like somewhat fun. But, we always are attracting new stuff, and that's because everybody works together. They make it easy for business to get up and rolling. They're very supportive of these companies. They want to make sure they're, getting their tax revenue, but also these companies are very successful. And just some of these, places on the East Coast, they don't really understand that. And they're too corrupt, and as Steve Wynn says, too stupid many times, right? And Wynn's talked about they got a Thailand potential opportunity as well. And the more I think about it, I'm like, maybe the Thailand opportunity is better. They'll be able to build a property in Thailand for pennies on the dollar compared to New York City, I can tell you that much. Because those New York City workers kind of want crazy money, right? And then Oh my gosh, there's so many taxes you get hit on trying to build something. That's why they're talking about $12 billion project in New York City. The scary part is, what if 12 billion is not the number? What if the project ends up actually costing 15, 14 billion, something like that? Like, that's a possibility, right? So maybe the Thailand opportunity is better. They got the property they're building in the Middle East right now, right? They have this piece of land on the Las Vegas Strip. Maybe they should build something there, right? And I mean, at the end of the day, they could probably build a beautiful, beautiful resort in Thailand and build another beautiful resort here in Vegas for probably way less money than New York City, to be honest. And so maybe it is a better play. By the way, that piece of land I have there for you guys, this is pretty fascinating. That piece of land was actually bought for over $1.2 billion. The dirt, the desert dirt there. Over $1.2 billion these investors paid for that back in, around '07. That's crazy to think about, right? That piece of dirt right there. And then Wynn ended up buying it out a few years ago for $336 million. So they, as with the stock market, it matters what you pay. In business, it also matters what you pay, right? And the stock market and business are the same dang thing at the end of the day. These guys got screwed. They weren't ever able to build their project. I don't think things went too well for them. Let's just put it that way. And then Wynn gets to scoop up that for 336 mil. They could probably sell it off today for a huge profit, or they can keep it and build on it and, make a bunch of money that way, right? Crazy. So, by the way, I do want to point this out for Google shareholders. This is the first time I've used the Google AI and was actually very impressed by it. It was actually very helpful. I Googled their land across from Wynn history, and then it gave me this AI overview. That's phenomenal. It did a damn good job. I gave it a thumbs up. So, yeah, it says right here, generative AI is experimental. So, I don't know. Don't get too excited about the Google AI, but they might have something, guys. They might have something. I'm impressed. I got to say, I am impressed. Now, Wynn Resorts, they'll be fine. They're going to thrive in the future. They've been through the great financial crisis. They've been through Rona. They went through the Macau crackdown. They went through Steve Wynn, the face of the company, the face of Las Vegas, being booted out. They'll be fine in the end. It's going to be a huge money maker, but it is what it is in the short term, right? Palantir, new multi-year high. And the thing I'll say about Palantir, the move is too strong in regards to Palantir. Like, somebody's got to know something here. And the stock just continues to go higher and higher and higher, and this isn't retail driving the stock higher. My thinking is somebody knows something, either about S&P 500 inclusion coming down the pipe here, or maybe they know something about Palantir is going to likely beat earnings and they're going to guide up. That's my thought, because the stock is way too strong. This has to be Wall Street money coming in here recently. The move's just too strong, man. Way too strong. There's like no profit takers in regards to this one, and so I'm looking and I'm like, somebody knows something here. Maybe it's both, right? Maybe we get S&P 500 inclusion and we get beats in a guide higher. That's a possibility as well, right? Now, Boeing, you look at a stock like that stock just goes lower and lower, down 30% year to date. But it refuses, it honestly deserves to be down there, right? It deserves to be down there. That's a trash stock. I look at something like a Boeing, I wouldn't pay a penny for that stock. There's nothing you could do to make me to buy that stock. They're just too problem driven. You gotta understand the difference between companies that are going through a tough time in regards to their stock price because the consumer is weak, or there's a market dynamic where people don't want to be in those sorts of stocks. They're rotating out of those, right? So they want to rotate that money into other places. You're going to understand the difference between that and just bad companies. Let me be very crystal clear. Boeing's a bad company. They've been mismanaging that company for 5-7 years now. At least 5 to 7 years. I've watched that company be mismanaged all the way back to prior to Rona. They were mismanaging that company, right? Making mistake after mistake after mistake after mistake. And so that's the differentiator between, wow, all these stocks are down, they're all buys. No, it doesn't work like that. Some of these actually have fundamental issues with them. Some of these companies, management teams are bad at these companies. And those are the ones you kind of got to say, you know what, I'm not in this, but there's these other opportunities in the market like a Starbucks and Nike, some of those sorts of stocks that are going to end up being easy money at Wynn Resorts, right? And there's some of these other stocks like Lululemon, Boeing, I think have a lot of question marks, right? And I don't even really want to put Boeing and Lululemon in the same sentence because Boeing's a whole other piece of work, right? And that leads us to this point I want to make here, right? There's thousands of stocks in the stock market. Buy the best companies that are the most undervalued. Buy the best companies that are the most undervalued, right? In the stock market, it doesn't work like poker, right? Poker, you got to play a lot of different hands if you want to win any money, right? But in the stock market, we can play only the straight flushes and royal flushes if we want. We can play only the royal flushes if we want, right? That's a great thing with the stock market. We don't have to play high card. We don't have to worry about, a two pair. No. We're trying to buy the best that's most undervalued, folks. That's what we're doing, okay? Appreciate y'all joining me as always. Thanks so much for being here. Last week, I signed 2 seven-figure club awards to private group members, and I signed 10 six-figure club awards. That means we had 2 members that hit $1 million plus in their stock market portfolio. We had 10 folks that hit 6 figures plus in their stock market portfolio. So if you're looking to apply to your own private group, take your game up to the next level, get serious about building your wealth, apply with the pinned comment down there. You're going to learn so much from that. It's ridiculous, absolutely ridiculous, okay? Take advantage of that. Much love and have a great day.